Bitcoin whales are some of the most influential players in the cryptocurrency market, with their massive holdings capable of sending shockwaves through the price of Bitcoin. But what are they up to right now? And should we be concerned? In this video, I'm diving deep into whale behavior and what it means for Bitcoin's price trajectory. We'll explore key metrics, accumulation and distribution patterns, and whether we're approaching the peak of this rally. Are whales still confident, or is this the beginning of a major shift? Let's find out. A Bitcoin whale is generally someone or something holding a large amount of Bitcoin, typically 10,000 BTC or more. These large holdings give them substantial influence over the market, as their buy or sell decisions can cause significant price swings. Analyzing whale behavior is important because their transactions often precede periods of extreme volatility. Whales can be institutional investors, early adopters who acquired Bitcoin at lower prices, or large holders who bought in later. They usually manage their positions carefully to minimize market disruptions, often distributing coins during retail frenzies and accumulating during market consolidations, although this isn't always the case. Their actions are closely watched by the crypto community, so let's dive into some key metrics to see what these whales are doing right now. The Bitcoin accumulation and distribution chart reveals that whales have been offloading their holdings during the rally that propelled Bitcoin to the $100,000 mark. Is this cause for concern? While whale distribution has persisted around the $100,000 level, the pace appears to be slowing down, indicating a potential shift in behavior. To dig deeper, the percentage supply change chart provides insights into which cohorts have been accumulating and distributing. As noted, major whales, those holding 10,000 or more Bitcoin, have been selling into the rally. But who has been buying? Interestingly, the primary accumulator is the dolphin cohort, highlighted in red. This group consists of holders with between 100 and 1,000 Bitcoin in their wallets. It's plausible that some of these dolphins represent institutional investors who are strategically spreading their Bitcoin across multiple wallets to avoid consolidating too many coins in a single address. Notably, it's not just the whales reducing their positions. The shrimp cohort, holders with between 0 and 0.1 Bitcoin, have also been offloading some of their holdings during the rally. This behavior could be attributed to smaller investors capitalizing on the opportunity to take profits at the significant psychological milestone of $100,000, a level that often prompts retail participants to lock in gains. However, when we turn our attention to the 1-year change in total whale holdings chart, the bigger picture becomes clear. Despite recent distribution, the year-over-year trend is overwhelmingly positive. Whales have been accumulating Bitcoin at an accelerating rate, and there are no indications that this trend is slowing. This long-term accumulation suggests sustained confidence in Bitcoin's value and future prospects. The total whale balances continue to show a steady increase since 2023. Currently, the data indicates that true whales, shown in green, account for approximately 1.44 million wallets. However, this doesn't necessarily mean there are 1.44 million individual whales. It's highly likely that many whales spread their holdings across multiple wallets, meaning the actual number of unique whales is significantly lower. Interestingly, the trend of new whales, highlighted in orange, has seen a sharp uptick since Q3 of 2024, reflecting a surge in large-scale accumulation. Another fascinating metric is the whale cost basis. For long-term whales, those who have held their coins for at least 155 days, the average cost basis is an impressive $27,000. This price level marked the perfect bear market bottom in 2022 when long-term holders aggressively bought up the available supply. On the other hand, short-term whale holders, who have held their coins for less than 155 days, have an average cost basis of $86,000. Historically, this level has acted as a critical support line during bull markets, where whales step in to accumulate more Bitcoin and sustain the rally's momentum. Short-term unrealized profits have reached an all-time high, which aligns with Bitcoin trading at its highest price ever. This also suggests that, while some whales are distributing their holdings, the majority are still sitting on substantial gains. This could indicate that whales remain confident the bull market has more room to run. The unrealized profit ratio offers further insights, showing how much profit both long term and short term Bitcoin holders with large holdings are currently sitting on. Historically, this ratio has reached levels of 3 or 4 before a bull market peak, marking the point where whales begin heavy distribution. At present, the ratio is sitting at 1.4, which suggests there is still significant room for growth before hitting peak levels of profit taking. Additionally, when examining the supply levels of long term and short term holders, clear patterns emerge. During bull market peaks, long term holders typically distribute their coins to short term holders as the rally continues. This process persists until the supply of retail driven short term holders reaches saturation, at which point the bull market tops out. This behavior was evident in both the 2017 and 2021 bull markets. As we enter 2025, the data shows that some distribution has occurred from long term holders, but not yet to the levels usually seen at a bull market peak. With Bitcoin's price climbing higher, this is a key metric to monitor, particularly as retail investors re enter the space in greater numbers. Keeping a close eye on long term holder distribution will be crucial in determining when we might approach the next market cycle top. To wrap things up, looking at the data, it's clear that whales are still very much in accumulation mode, despite some selling around the $100,000 level. While they've offloaded some Bitcoin, the bigger trend is that their holdings continue to rise year over year. This steady increase shows that their long term confidence in Bitcoin remains strong. They may be taking some profits along the way, but they're not backing out of the market anytime soon. What's also interesting is the role of the dolphins, those holding between 100 and 1000 BTC. They've stepped up as the primary buyers during this rally, offsetting the selling pressure from the whales. This group could very well include institutional players quietly building their positions, further reinforcing Bitcoin's growing adoption and long term potential. Finally, when we look at key metrics like the unrealized profit ratio, which is currently at 1.4, it's clear that we're not yet at the overbought levels typically seen at market peaks. Historically, when this ratio hits 3 or 4, whales start to take profits, but we're still a ways off from that. Combined with the fact that long term holders haven't distributed their coins at the usual levels, it seems like there's still significant upside potential in this cycle. So, while we're seeing some distribution, the broader picture suggests that both whales and other market participants remain optimistic, and the current rally could have plenty more room to run. And that's all for today's analysis. Thanks for tuning in, and I'll see you in the next one.